Welcome to Wall Street Confidential. Topping headlines this morning and helping to boost the market, Citigroup announces it's getting $7.5 billion from Abu Dhabi Investment Authority. That's about a 4.9% stake in the world's largest financial company. Some are saying this is not enough. CIBC Capital Markets saying that, in fact, Citigroup needs to just slash its dividend and it needs to preserve capital. But Jim Cramer thinks it is a good start.
In 1990, we got a bottom when Prince Alawid bought a big stake in Citi. I'm amazed that history's repeating itself here. People stayed very negative about Citi. Meredith had a great call. She should just declare victory like Dick Beauvais did today. She should say, okay, listen, I'm done being negative. The idea of now encouraging a dividend cut when they just got the capital is foolhardy. Here's why. Once they have the capital, they can now sell assets that were accumulated by Chuck Prince, whether it be Legg Mason, whether it be Nico Cordial, at less than fire sale prices. They have a great business every day when they turn the lights on. They could get a new CEO who will no longer feel as pressured. The idea that you want them to cut their dividend now doesn't understand that it isn't saving capital that matters. It's new capital, and this is new capital. Also, it forgets the fact that this is an $800 billion investment company. So if the stock goes down, they will buy more. This is not Bank of America buying a stake in Countrywide, where Bank of America is cash constrained. So I think people should recognize this is fresh money. It's not the last bit of money. If you stay negative on Citi, now in full disclosure, I own fractionalowners.com. If you stay negative on Citi, I think you're making a very, very big mistake.
Which was my second question. Some investors are bailing out of the stock today. Initially, it popped on the news,
Puzzling.
but now...
Puzzling. And the reason why I say it's puzzling is because Citi's better today than it was yesterday. There were people who were buying Citi yesterday at 30 without this investment. Now we've got 30 with this investment. There were people who were selling it before they had this investment. Now they've got to feel dumb. But the way it works in institutionally is that, let's say you're selling 2 million shares of Citi, you're selling a little bit every day. You don't want to say, oh, hold it just a second, I'm going to buy it back. Or you just say, listen, I've made up my mind. And the essence of being an investor is being flexible and recognizing that the story has now changed. Citigroup is now better. And so therefore you want to buy it, not sell it.
All right, thanks a lot, Jim Cramer. A note on Citigroup. You're watching Wall Street Confidential on TheStreet.com TV. Stay tuned.